Thanks, Celeste. Every other one. Okay. All right.
Mine doesn't work.
Check. Hello.
Cheers.
We got Roger Robot. Let's see. Oh, they wanted us to introduce ourselves. So I'm Trace Mayer, seed investor in BitPay, Armory, and Kraken, and I host a podcast, www.bitcoin.kn, where I interview lots of people in Bitcoin space. Jez?
I'm Jez San. I'm an angel investor and entrepreneur in the computer games and online poker space.
Someone else here? I think Steve there he is.
My turn. Hi, everyone. I'm Roger Vera, attending virtually from London at the moment since the U.S. Embassy would not issue me a visa. I'm an early Bitcoin adopter and investor in the Bitcoin space.
Hey, I'm Steve Waterhouse. I do venture investing in Pantera Capital.
I'm Michael Terpin. I started BitAngels. I'm the chairman there. It's the largest decentralized angel group for investing in Bitcoin startups at the earliest stage. And this past year, I also joined with Nick Sullivan and Gil Pincina to form the AngelList Bitcoin Syndicate.
Hi, I'm Matt Roszak with Tally Capital. I'm moderating today's panel. Honored to be here. Invested in about 20 Bitcoin companies, a lot of the bridges, roads, and tunnels, everything from wallets to exchanges, payment processors, miners, and we got a great panel here. Thanks for joining us. Roger, where are you right now?
I'm in London, England at the moment.
Great. Couldn't make it to the U.S.?
No, the U.S. Embassy wouldn't issue me a visa. They claimed I wanted to live there as an illegal immigrant.
Well, we kick their ass with technology here. I said we kick their ass with technology here.
Oh, we definitely did, and Bitcoin is just the start of it, so thank you guys. But when I'm speaking, I can't hear what you say, and there's about a half-second delay before my audio kicks back in to hear what other people are saying.
No worries. So why don't we get the party started here, and let's talk about security. We've had some pretty bad hits last year with Gox, and there's so many examples along the way, leading all the way up to Bitstamp recently, which had a speed bump and recovered extremely well. But you would think at this point, you know, everybody would be filling those gaps, those security gaps by now, or having audits, having different ways in which to solve these security issues. Let's kind of go across the panel and ask, you know, how you view security today. What's the dynamic? What are the lessons learned now? I mean, I think we get better, stronger, smarter with all these things that hit the ecosystem. And I'll just open it up.
Well, I think we are getting better every year. I had dinner with Roger in Hong Kong over the summer, and he was harking back to the days when there really weren't even Bitcoin wallets and everything was on QT. And I mean, it wasn't that long ago, 3.5 years. So, you know, I think that what happened with Mt. Gox is much harder to happen now with audits. As multi-sig really starts to roll out in more sophisticated ways, you know, there's still things around the edges with hot wallets that, you know, things can happen, but it's certainly not happening with the frequency that it happened with, say, a year ago, 2 years ago. And I think by the time that 2016 rolls out, it'll be the rare instance where you have, you know, any kind of substantial hacking of keys once fundamental technologies become known and adopted, like multisig.
Yeah, so I clearly think multisig is a big part of the answer for securing coins. But, you know, a big part of security and you know, certainly from our experience and, you know, things I know, we spend a lot of time thinking about the space. A lot of it is just best practices. A lot of it is social engineering. There's plenty of ways to hack things that, you know, even if you're multi-sigged, you're still going to lose stuff. And I think that Bitcoin companies need to in general raise the bar for how they think about their own security, how they think about their practices. And so I kind of encourage all the startups and all the companies involved in this space to take this stuff like another level more seriously. We were recently kind of throwing around the idea of, there'll be companies formed out of this experience, and over the next this period of time that people will start talking about Bitcoin grade security, this kind of enterprise level security, and now there's like another level. Because, it's great to hack and get some data and get some information, but if you can hack and get real money, I mean, assuming we call this stuff real money, then you can, there's much more lucrative. So I think there's, another level that we need to take our industry to and be much more aware of what that means.
I think we're not there yet. We've made massive leaps with multi-sig and hardware wallets, but it's security and convenience need to go together, and we need to have security that the man in the street can use and doesn't have to understand it. Right now, you have to understand how to keep your Bitcoin safe, and that's not good for mass adoption. It needs to be super easy. It needs to be, transparent and completely convenient. And we're not there yet, but we're making good progress.
Yeah, I mean, I think this is just part of Bitcoin's growing up, you could say, its professionalization. When we were on the panel at Coin Summit with Dr. Waterhouse moderating it, I talked about the importance of having like a new industry of crypto auditing standards. It's going to be a merger of information system standards, best practices in securing networks, and traditional accounting. I think that's extremely important. One of the reasons, I strongly support Michael Perkland for his run in the Bitcoin Foundation, particularly with the work he's been doing at C4. He's a security professional in designing these procedures. I think it's something that we need to do industry-wide. The other problem is regulation in this space. For example, the BIT license talks about a CISO, like a Chief Information Security Officer. So, now we want to centralize the blame on a particular person. But I've been discussing this with Brian Donegan from the Isle of Man government, because they're passing this Proceeds of Crime Act that has a regulation specifically to give the regulator jurisdiction over Bitcoin. And he was asking me my thoughts on, how do we deal with the two main issues. One is keeping crime out, and the other is protecting customer funds. And I'm very, very interested in making sure that customer funds are protected. That's one of the reasons I funded Armory, was so that it could stand as a silent sentinel, that you could demand the Bitcoins to your own private key and they could be safe, because nothing focuses the mind better than a bank run or an exchange run. I think it's great, just demand the physical keys and we'll see if the service has them or not. But telling Mr. Donegan, when it comes to regulation, perhaps we've got a problem, because there's no way to tell whether a service was compromised by a third party or whether they hacked themselves and absconded with the Bitcoins. And that there could actually be great business models for that. Exchanges or whoever could have business models where their business model is to steal your Bitcoins by going defunct. And so I was telling him we need to have, perhaps in the regulation, a strict liability standard. And if customer funds are lost, we could have mandatory prison sentences. And then insurance companies could come in and mitigate the loss to customer funds, and that would then mitigate the mandatory prison sentences. And so then we could offload onto the insurance companies all the risk assessment on whether the Bitcoins are safe. And what
that sounds harsh, by the way.
Well, I mean, it sounds harsh, but it's strict liability. And when we're dealing, we have things like MF Global, Lehman Brothers, AIG. Customer segregated funds are getting hypothecated and rehypothecated like crazy. If we're going to be building something from the ground up that's going to be safe and secure for a worldwide monetary system, where we know with absolute certainty who owns what and what's being encumbered by what, which we can do with Bitcoin, which we can't do with this current system because we don't have a globalized ledger, then we're going to need to know that the integrity of that system and the integrity of the people holding the private keys is being done ethically. And if the insurance companies step in, then they can do the risk assessment. So they can make the customers whole, and then the mandatory prison sentences don't trigger. Because as long as the customer's funds are safe, or if they're lost and they're made whole by the insurance company, no harm, no foul, you could say. But if we have $500 million disappear, somebody should go to prison. I mean, that's just what should happen. I mean, oops, I lost them. Maybe they're over here. I mean, it's just absolutely ridiculous that we don't have these types of safeguards in place, both in our legal code and in our policies and procedures with our Bitcoin companies and the security. And so, I think that the software is getting mature enough. We've got things like Armory and mSigna, where we've got cold storage, multi-signature. We can build the policies and procedures around that to segregate the duties, and we can keep customer funds safe. So, it's all part of the maturation process of the industry, but it's the absolute foundation that we are building on. The funds have to be safe. The security has to be safe, or nothing else can happen. None of the other network effects can take place.
And I get it. It's got to have harsh consequences. I mean, the GOX people that, were behind that should go to jail. I guess, building a fiduciary layer in some offshore market that you rely on them to do this should have severe penalties. So I get that. Yeah, I get that. Roger, what do you think? Where's your head these days on security, all the lessons learned, where we are today?
Certainly been lots of security issues with Bitcoin along the way, but one really nice and exciting thing is there's now hundreds of companies around the world with millions or even tens of millions of dollars per company to work on solving these problems. And these problems are going to be solved. It is going to happen, and it's happening at an incredible pace. And a year or two from now, we'll look back on January of 2015 and think, oh, look how primitive things were back then, and look how far we've come. Just like if we look back to January of 2013. The ecosystem today is just on a whole other level, and it's going to continue. And the rate of improvement in this space is going to increase. It's exciting to see that happen.
So switching gears now to venture investment, a lot of venture guys here on the panel. So last 12 to 18 months, there's been about $400+ million invested in the ecosystem. A lot of people build the analogy to the early days of the internet in terms of ratio and amount of capital invested. And I was on a panel with Roger about a year ago today, saying that it was the wake up and smell the Bitcoin moment for VCs. And you kind of fast forward a year now, and you kind of look back over the shoulder, or the kind of the vibe in the room going forward is it's a wake up and smell the blockchain moment, where people are saying, okay, the speculative cycle of miners spinning out Bitcoin and speculators buying that model is kind of worked, and now it's kind of shown its true color. Now it's a question of having the other wheel work. We're building applications, utility adoption, and making the blockchain and the de facto Bitcoin start to get some inertia. What's the thinking here in terms of blockchain technologies, stuff you're seeing, and getting more utility out of this protocol?
Sure. So first of all, I don't think it's so much that people have lost faith in mining technologies or wallets or exchanges. It's just that they've been fully funded. I mean, if anything, there's going to be a shakeout among them, and that's already happening. And there's a number of winners. I mean, there's half a dozen companies that did $100 million plus in the mining space. This last year, obviously, there's a lot of issues now with price versus hash rate, and but the real pros, they're running great businesses will be the leaders in that, unless they screw it up like any other business. But the next wave is really what was just starting to be called Bitcoin 2.0 a year ago. At BitAngels, we actually were the primary funders of the very first Bitcoin 2.0 company, which was Mastercoin, with the Exodus address. And that was raising $600,000 through a crowd sale when Bitcoin was $100. So within a few months, that was all of a sudden a $6 million war chest, and if they hadn't spent any, it would be back down to about a $1.2 million. But obviously, they did spend quite a bit developing infrastructure. It's now called Omni, did the rebranding at this show. But I think that the blockchain aspects of it have really been accelerating. in the last couple of months in particular. At this show, you really had kind of the coming out of Factum. You've had a number of other blockchain companies starting to make real progress on smart contracts and some other areas, and I think that that's going to be the area where IBM at CES made an announcement that they're doing things in the blockchain. So I think as big business gets involved, you know, even if Bitcoin comes back and is $10,000 a coin, that's $200 billion. The impact as a technology on the IT industry is going to be in the trillions. So I think that's where the VCs and certainly, you know, my investments have been looking at that area.
Yeah, we're still looking. I guess we're still looking at really building out the stuff that we started a couple of years ago. And that includes, you know, funding of international exchanges. We're obviously, we acknowledged recently we're in Bitstamp, which is in Slovenia, but it's mostly a US dollar focused exchange. We're also in Corbett in Korea, and we've got a couple of other deals we're announcing soon. So we're very focused on enabling, you know, Bitcoin to become a cross-border trade vehicle. So that's being a big part of it. So that's not really sort of blockchain 2.0. We're seeing a lot of new companies coming out with smart contract solutions and, you know, applications enabled around that. I feel at the moment a lot of it is still very much like infrastructure, you know, another platform, and I'm really looking for, you know, applications in that space, the kind of killer app for smart contracts, because, you know, we keep building layers upon layers upon layers of these, you know, frameworks, and, you know, in the end, finding a killer app for something is really where this goes. What I've been excited about in the last year is that a year ago we were talking about micropayments as a theoretical idea. We were talking about remittances as this theoretical thing we were going to do one day, and, you know, cross-border wires as a theoretical thing, and now there are companies doing that. And I think that's really exciting, and, you know, getting behind those companies and building out those real-world applications, I think, is what's going to make Bitcoin really successful in the next couple of years.
And you invest in ChangeScope.
Yeah, and we invest in some of those guys too. Yeah.
I tend to agree that while there's still more infrastructure that needs to be done, wallets need to get easier to use and safer, there is still no killer app, and we're looking for it. It could be remittance, could be the earliest killer app, but we need to find a way to get fast adoption among customers, and onboarding merchants hasn't made the impact that people expected it would, and perhaps partly because merchants aren't offering customers an incentive to use it yet. You know, you can buy a computer on Dell or a holiday on Expedia, but you don't get a better deal using Bitcoin, even though the merchant does. So we need to find the next way to speed adoption. Go ahead.
You sometimes do, like with Gift, you had 5% off during a couple of different promotions they've had, just they buy an Amazon card. I think the biggest problem is that they're turning 100% of it into fiat.
Yeah, definitely. The two biggest problems, I say this all the time, are miners and merchants right now, because both of them are selling every Bitcoin they get, practically, and selling it into dollars, which is putting a lot of pressure on the price of Bitcoin. And it's quite ironic that the more merchants that, you know, that BitPay and GoCoin sign up, that's more selling pressure on Bitcoin. So, you know, one day we've got to find a reason for people to keep their Bitcoins and not sell them.
And to buy them as an investment, which probably is a future question.
Yeah, I suppose one of the largest killer apps for Bitcoin is that it's nobody's liability, just like gold. In our current financial system, we don't really know who owns what. We don't know to what degree it's been encumbered. We don't know to what degree it's been hypothecated or rehypothecated. The customer segregated funds, who knows where they're at? John Corzine, MF Global, all of this. And so the next major shock, financial crisis that's coming down the pipeline, this fleeing to safe haven assets is just going to continue to intensify. And the politicians are going to be seizing retirement accounts and bank balances and bail-ins, and there are going to be more bailouts, like all of this, to plug the massive holes that the derivatives have introduced into the market. Bitcoin is nobody's liability. And not only that, it's extensible, so it can be a solution to a lot of these things. And that's just increasing the backwards compatibility with the current system, whether it's ATMs or the BitPays with ACH and all this stuff. We've got other stuff that we can abstract and then put onto the blockchain, whether it's titles to houses, airplanes, cars,
some of that
stuff
will need law changes. Like if you put your title of your house on the blockchain, the technology might say that you've sold it to this person, but the government's not going to defend it and say that that's now their house.
Well, that could already be handled with private law. We could have the real estate owned by an LLC. The LLC could be entering into contracts that have binding arbitration clauses in them, and then that's recognized under the New York Convention by treaty in over 150 countries as binding, and it's not appealable like a court judgment would be. So, I mean, we could have applications or creative entrepreneurs that provide solutions that would be binding under law, and we could be moving stuff into the private law realm. So, I mean, there's a lot that we can do to unhypothecate everybody's assets that everybody thinks that they own, but they don't really own because they've all been encumbered in some way. And I think that's a major killer app that Bitcoin could really be applied for.
Roger, how about you? Kind of blockchain technologies, next killer app, driving adoption. What are your thoughts?
One of the things that I think we're going to see coming up here in the near future are merchants are going to start actually giving discounts for people that pay in Bitcoin over credit cards. Because right now, all the benefits going to the merchant for accepting the Bitcoins, they get fiat in their bank account, and it doesn't cost them, it costs them less than it would to accept a payment by a credit card or other ways. And we're starting to see some of that pressure coming in the form of companies like Broker or Purse.io, in which people can get a 20 or 25% discount on goods from Amazon.com when they pay in Bitcoin, because other people sitting on a bunch of Amazon.com store credit now have a way using Purse.io or Broker to convert it into Bitcoins and get local currency. So I think anybody who's not interested in financial policy or, you know, any of this technological stuff, if they hear they...
And it's gone.
Using Bitcoin. Sorry for the static.
Thanks, Roger. So let's get a sense for the room here. Raise your hand if you're an entrepreneur raising money, starting a company, thinking about getting into this ecosystem. Raise your hand. Okay. And then investor looking to invest in the next new promising Bitcoin startup.
All the entrepreneurs, you should be watching where they're sitting.
Yeah. Pay attention. We should get like a social app going on this. Let's. So we've got a few minutes left. I thought I would open it up for Q&A and give it back to the crowd here. Any questions?
My name is Alex Palantas. I work for the Secret in New York City. What is your take on the remittances topic? Because you see very low interest in the United States. It's a lot abroad in Greece, but in the US, it's very slow.
The question is remittance. How do you solve that?
So I think there is a lot of interest in investing in remittances. The challenge that we've had in finding good remittance investments has been that the guys in Western Union actually did figure something out. They figured out how to get cash in and get cash out, and they use a kind of antiquated backbone, but that part of it they figured out, and so that becomes like a really strong core advantage. And most of the companies we talk to haven't figured out how to get either the cash in or the cash out. So if you can figure those things out, and you've got good connections. And the other issue is that a lot of the countries that you want to send the money to don't have exchanges. Their exchanges are in these sort of larger trading block areas. So I think as we see more rollout into those areas, and some startups have been focusing on doing both, putting an exchange in their country and then combining that with remittances. So I think there's a lot of interest. It's just that the solutions aren't quite there yet.
And it's also interesting to see the proliferation of Bitcoin ATMs. About a year and a half ago, I was discounting that model, but it's going to be one of the first experiences for a lot of people in these remittance markets to onboard to Bitcoin, get their wallet, and kind of be part of this ecosystem. So the Bitcoin ATM space is, I think you're going to see more and more innovation there. I think you're going to see more and more partnerships with kiosks and traditional ATMs. and that'll open up a lot more of that railroad for global remittance.
I think the remittance market is interesting because it could potentially work without the customers even knowing that they're using Bitcoin. So a company could make it completely transparent and take money in at one end and deliver money the other end, and use the Bitcoin payment rail to actually deliver it efficiently, and neither customer needs to know that Bitcoin is being used.
I think that's exactly what's going to happen. This panel a year ago, I said 3 things needed to happen for the infrastructure to move forward in 2014. Only 1 did. So I said that there needed to be a fully compliant U.S. exchange. There still isn't. Getting closer, but it still isn't. So it's not easy to tell, a typical investor, how to quickly go and buy Bitcoin without going outside of the United States. And then depending on how much you're doing, you have to worry about FATCA filings and FBAR and the whole bit. The second one was an ETF. Obviously, it's been filed for with the Winklevoss brothers and Barry Silbert, but it's not up. And that's the thing that's going to make the price go up, because more merchants means the price keeps going down. And then the price going down means more miners are selling. It's a vicious circle until you have somebody actually wanting to buy Bitcoin that doesn't already have Bitcoin, and you have to make it easy for them. And those things make it easy. The third one, though, that I think is going to be huge for the remittance market is I said that you needed to have a piece of plastic where you could put Bitcoin in one end and take USD out of the other end. And you have it now. There's actually a couple places. This one is actually from ANX Pro. Out of Hong Kong, and you can get it as an American, and they give you a card, and it works. I bought breakfast with it this morning. So they charge on some of their transactions 1/3%. So you have cash going in at 1/3%, and you go and you take it out on the other end, and I think for ATM things, it's maybe 1% or something, so 1.3%, and you can take it in as USD and take it out as USD, Indian rupees, whatever, through the already existing worldwide global ATM system.
I think that those debit cards that bridge to your Bitcoin wallet are very useful and very interesting. And there's also another one. Mycelium are working on a credit card that is actually your Bitcoin wallet as well as potentially a debit card.
And again, that makes it easy for grandma.
Yeah, and just to make it kind of a personal story, I had an employee a few years ago before Bitcoin existed in the Philippines, and PayPal was doing one of their random checks and froze my account, and I had to verify my address, and it took like 2 weeks. And meanwhile, his wife had a baby, and I couldn't send him his monthly salary, and it was a real nightmare. Today, coins.ph and rebit.ph, I haven't personally used them, but from what I understand, I send Bitcoin and a guy on a motorbike shows up and delivers the Philippine pesos within an hour. And when I was sending him his monthly salary, it was about $50 US for him to get it changed into pesos. It now costs 50 pesos to get it delivered on a motorbike, and it's way faster. So Bitcoin is cutting down the costs in terms of time, money, and privacy on pretty much everything.
So I think that's a wrap. Thanks, Roger, for joining us. And please join me in thanking this great panel.
Hey. See you in London.
Maybe see you there. Maybe someone can pick me up and carry me. Thank you, everyone.
This is the second robotic person I've met in 6 months.
Hey. Break a leg. Oh, who needs a microphone?
Roger's doing better than Charlie, though. Up next is Perry Amboring and Jim Newsom, former commissioner and chairman of the CFTC.